We have a sell signal. Woe to the markets. My name's Dez here at Grok Trade, and this is the weekend edition. Good through Sunday, April 13th, 2014. Friday, the markets ended in bearish territory with the Dow down 143 points. VIX up 7%. We're at 17, gang, on the VIX. We're going to be looking at gold and silver. We're going to be looking at a lot of stocks. So let's hit the ground running. This is a sell signal. We busted big support on Thursday, Friday. We had confirmation, but the sell signal came on the weekly chart. You'll see that we talked about this trend line coming up higher, higher, higher on the S&P 500 weekly chart. And I said the markets, the hill itself, had to rally back on Friday and get above this red line. It failed to do so. We kept going lower. Now we're below the 20-week moving average. The last time we were below that, but it was just a short amount of time, was, it looks like, August 2013. Outside of that, it was way back here in 2012. But after an extended run higher, we're seeing significant weakness in the markets. We broke a significant trend line coming higher. This orange line is very important because this is my shadow line. You'll see that here. Support, support, support. That is going higher. And that could serve as some sort of support level. However, I'm not seeing it. We did get a close below that line. Ouch. So if you look here at the monthly chart, check this out. We have a higher high, but we have a lower low with the body, the close, making the lower low, which is a very important part of a candlestick. That is telling. We see nothing but downside potential here. I would not want to be long at this moment. At best, at very best, you want to be hedged in the markets. If you don't know anything about hedging, a website that you should know about is called teachme2hedge.com. teachme2hedge.com. You have to be able to do that to save yourself. I'm hedged right now in the markets, and let me look at today's account. Yeah, so I am actually up money with the markets being down on Friday 143 points. I am up money because my hedge did better than all my long positions. That's great to have the markets drop and still make money and technically not be short the market. Now on a monthly chart, we've been making higher highs. So long as I'm making these higher highs, I have long positions going, but we do have a lower low right now at the same time. I want to be hedged in that environment. If you look here at the NASDAQ monthly chart, we have quit making higher highs. We got a lower high, lower low, boom. There's our first candlestick heading southbound. That's our pivot candle. Look for more downside potential here on the NASDAQ. The weekly chart broke it a couple weeks ago, and we broke another trend line. Check this dude out. We're coming up. We snapped it. So, techs are in huge trouble. On the daily chart, down, 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 down. We do have an inverted candlestick. We had a symmetrical triangle. It dropped, broke down, rallied up, kiss of death, and dropped again. Wow. Take a look here at the banks. Daily, we drop, 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 drop. We do have a doji. It looks like we could bounce here. We did do this little low base and a drop. On a weekly chart, we dropped, we went higher, hit our head, we come right back down. Ouch, ouch, ouch. I actually could put another line in right here and here. Oh, we broke it. The weekly chart broke a trend line also. The markets are broken. The monthly chart, lower high and a lower low. Pivot candlestick on the monthly chart. Ouch. Ouch, ouch. Markets in dire trouble right now. Downside potential. You're hearing it right here. Share this video. People need to know this stuff. Go to the VIX monthly. There it is. Just sideways. But look at the weekly. Big pop. Boom. Now here's the thing. No one else is saying it. You're going to hear it here. This is the 200-week moving average on the VIX. We touched it and dropped. The markets got really bullish after that. And this was, when was this? April 2012. Here at the end of 2012, we touch the 200-week moving average. The market's got really bullish. Remember, the VIX is a fear indicator. It only goes up when everyone's scared and the markets are dropping. It's an inverse indicator. So if you are dropping, it means the markets are bullish. We come over here in 2013, around June, and found resistance to the 200-week moving average. Markets went bullish right after that. We went higher, same thing here in 2013 in fall. We hit it, and then we went bullish. And then here, starting off 2014, we hit that line again, went bullish. We're ready to hit that line again. And I'll tell you a couple things I want to share with you here. Look at this. If I draw a trend line here and then draw one here, we're rolling over. We're doing a cup. Here, let me get another one here. I want you guys to see this. And you're not going to see this anywhere else. I've been doing this 16 years. I know what's going on here. Anytime you start to drop, you're slowing momentum. So we have lower swing lows. Now we have higher swing lows. Now we have a sizably, the trajectory here is big time higher swing low. This is the market's getting more and more bearish because the VIX is getting more bullish. I foresee an uptrend commencing, and I see much higher VIX prices coming. Technically speaking, again, share this video with friends. They need to know this stuff. On the daily, we're heading higher. Gold stalemate, but I'm saying gold is a sell. So you're hearing it here. Sell gold. Gold has, on a daily chart, a nasty bear flag at the 38.2. It is a juicy short. Big volume coming down, small dissipating volume going higher. The weekly chart, you'll see here, the weekly is actually a bullish. We go higher, a bull pullback, a hammer. If we start to show any sign of weakness here, it is a sell. However, the weekly is a bull signal. And if you look here at the monthly, it's looking bearish. There's our bear pullback and starting to show some weakness here. Ouch. Silver. Here's the monthly chart. Bullish, morning is bearish. Double bottom. We're in the apex of a falling wedge triangle. Be looking for a breakdown or a breakout. More bullish and is bearish. However, this can go either direction. On the weekly chart, we ran higher, down, building a low base below the 20-week moving average. That is more bearish and it is bullish. And on the daily chart, big bear flag. Look for downside potential. Not liking precious metals at all. All the NASDAQ was down. So let's take a look at Apple while we're here. Here's the daily chart. Big drop. We tried to do a bounce, but nothing is happening here on this market. We just come crashing right back down on Friday. If you take a look here on the weekly, we broke down below. We're first crack, gang, below this trend line. Ouch to Apple. Apple is a sell. Apple is a sell. Do not be long Apple. If you look here on the monthly chart, check this out. A close below it. Apple is a sell. So get out of Dodge. Amazon down almost 2% on Friday. And we touched resistance. We said look for it to drop. Sure enough, resistance, we drop. Resistance, we drop. Here we are. We boom. Resistance, we continue. Southbound, the weekly chart down, and down. The monthly chart, just a nasty little bull pullback. But look for a bounce somewhere around $300 on Amazon. Facebook, monthly chart, little bull pullback. Weekly chart, down. We're getting a little bit of a pop here. It's a bullish thrusting pattern. This could start going higher. On the daily chart, bear pullback. Big time bearish engulfing. That is a sell signal. Google on the daily popped down a little bit, trying to find some support. We did doji out. On the weekly, a nice little bull pullback. I'll tell you, gang, Google could be set up for a long-term buy. I don't know. We'll just have to see how this pull. If it pull back to $518 area, be looking for a buy opportunity there for sure. And the monthly, it's just pulling back. So again, a pullback and finding support above 500 would be a buy opportunity. LinkedIn monthly chart. Ooh, it's in a lot of trouble. Weekly chart, just in a lot of trouble. Daily chart, it's a falling wedge, hit resistance and dropping. Microsoft daily chart, we couldn't even do the kiss of death. We should have went up there, did the kiss of death and dropped. We can't even reach at it. So we are building a head and shoulders, head, shoulder, 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 head and shoulders. And it broke the neckline on today's candlestick on Friday. The weekly chart, resistance area, and from this resistance area where we should only drop lower. There is a trend line that needs to go right here. It's a rising wedge, bearish formation, downside potential. Let's get rid of that monthly chart. You have a bearish thrusting pattern. Netflix on the monthly chart, nice little bull pullback. On the weekly chart, it's pulling back. It's too far of a pullback. I'm not interested in this one at all, but look for a bounce off the rising 50-week moving average. The daily is just broken. This thing is just trash. Get out of Dodge. Twitter here broke a support line on the daily. Ouch. The weekly. Ouch. Oh man, did it go below this support level? Oh, it did. Twitter's just pitiful, horrible moves. And fortunately, I am not in this. And my report that I get from the team is on our bearish list. Here are our big losers. So we do a bull and bear list at the end of the week on the stocks to be long, stocks to be short. And obviously the markets were short this week, and these were our big winners to the downside. Anyway, there you have it. Listen to the message coming up next. Everything we do here at Grok Trade is to help traders become all they can be in the markets. We have simplified something that I'm personally very excited about, a process in which anybody can learn how to trade and make profits in the markets. It takes time, takes some dedication, it takes formalized trading education. So anyway, the magic starts here. Step 1, the 101 courses. Step 2, the 201 courses. Step 3, lifetime mentoring. 101, we do our 101 courses. We do them through emails. You can take them on the website. We do the courses on Thursday, Friday, and Saturday. The 101s, very basic ABCs, very basic. My grandmother can take these and understand what's going on. But the real meat, the real secrets, the things that we have poured over, poured blood and sweat over and put a massive amount of resources and time into putting together the very best online home-based trading curriculum out there. I would venture to guess nobody has something so comprehensive and organized and thorough and well-rounded as what we have in the 201 course as far as trading is concerned, specifically in the areas of technical analysis. To validate this, and I will share this with you. We have mentored 2,000, 2,500 students or so now. Myself, I've personally mentored over 800 students, been trading live in the markets for 16 years, utilizing technical analysis. I'm an expert at this. I was hired to become a mentor coach and also sat on a prestigious curriculum committee for teaching me to trade. Also through Rich Dad Poor Dad, Robert Kiyosaki, Option Success, and Star Trader. So I helped oversee curriculums and education. I believe that our education is more well-rounded because we teach people how to vet stocks, how to find the best companies out there, and we pick them fundamentally. We trade them technically. We spend most of our time on the technicals, and we give all the tips, tricks, everything we do in the markets to make our money, we do here. Then the 301s, which is the lifetime mentorship. But the 201s is comprised of a lot of data, and For example, there's 28 lessons in here. You can see the things here. Everything with how to find patterns, how to draw your trend lines, support resistance lines, how to enter each trade, how to exit to maximize profits, how to know how much risk to put on, how many trades to have on at any given time. I mean, it goes into everything. What indicators to use, what oscillators to use. There is a difference between the two, how to analyze a volume. We get into everything. There's 5 courses, 28 lessons. It will take you over 6 hours to go through. Comes with 100% money back guarantee after 12 hours after you make the purchase. Because the courses are over 6 hours, you can almost take them twice and still ask to get your money back if you're not fully satisfied. Everybody loves this. Everybody does this. It is your next step. How do you do it? Go to the website. Once you go to the website, go to the 201 trading courses right here. And these 201 trading courses will give you everything you need to start trading with great confidence in the markets. You will be glad you did this. So go right now to the website, go down here to 201 trading videos, and immediately start your course and start to do trading wisely and well and be savvy at what you do. Catch you later.